JC?
Hey, JC, it's Joel, Dennis, and Brianna. We got you on live today. How you doing?
I'm doing well, guys. How are you?
We're
We
doing
do.
good. Doing good.
What's on your radar, JC, here for today? We're looking at the S&P futures, kind of a quiet overnight range, just 5 points here. But we had a lot of little individual movers there yesterday. We were talking about like a breakout day for General Electric. We really had a huge move in McDonald's yesterday. It was up over $3. And we also looked at that lumber liquidators where they were liquidating everything yesterday as it fell 17 points on their earnings report. What's on your radar here for today?
Well, I think you guys nailed it when you said it's kind of a dull morning. I couldn't agree more, and I think that's kind of a theme from throughout this week. I mean, how dull has this market been in terms of U.S. equities throughout the week? I've been pounding the table bullish. As you guys know, and you know the old saying about shorting a dull market, right?
Yeah.
JC,
Never short a dull market.
So you can't do it. You can't do it. So that's how I feel about overall, how a boring market, if you will. I think that, that couldn't be more bullish, for a lot of reasons, but I guess that's one of them. Your point on the McDonald's, funny, a good buddy of mine was asking me about that yesterday. But here's how I feel about it, big picture. You got a top at the beginning of 2012. You have, right over $100. Then you got another top in April of 2013. And then you got another peak in May of 2014, right over $100, right? Where I come from, guys, triple tops don't exist. They don't happen. So I think we rip right through that. I think we see all-time highs in McDonald's at some point this year for sure. Now, that doesn't really help us today. But with that being said, bigger picture structurally, I think this chart is very constructive. Short term, we had a great move yesterday for sure. We have a downward sloping 200-day moving average. There's a lot of pressure to the downside. So immediately, right now, this very second, do we go out there and buy it just because I think we make an all-time high? No, I think we could be patient. But big picture, man, I love this. I think at some point in the near future, we're going to be having a nice little conversation, the four of us, talking about McDonald's making all-time highs. I'm very confident in that.
I mean, is that just based on that, on the technicals, or do you see some fundamentals there, or where's your thesis coming from?
Yeah, I don't know anything about McDonald's. I mean, I know that they're all over the place and all over the world, and they sell burgers and French fries, and it's probably not that good for you. I mean,
You don't eat there? You don't eat at McDonald's, JC?
Man, in college we used to go to the dollar menu all the time.
Oh yeah.
We had I went to Fairfield, Connecticut, Fairfield University in Connecticut. We were right off I-95, and there was a 24-hour McDonald's right on 95, right by the school, and we used to wait till 3:30 in the morning so we could get breakfast instead of dinner. Late night. I mean, that's as much about McDonald's as I know, and that's more than most people, I think.
Yeah.
But as far as the chart, I mean, man.
Yeah.
Structurally, bigger picture. You look at that weekly chart. Like I said, guys, where I come from, triple tops don't exist. I think we rip right through that at some point, and we go a lot higher. 100, 110, 120. I'd be surprised if we didn't get there at some point this year.
We're looking for that multi-year breakout. Well, JC, I gotta give you some credit because we were talking just last Thursday when you were on the show, and I had pointed out three highs in the S&P futures, right, just under 2,100, and I said, do you see that as resistance? And you're like, no. And sure enough, actually we had that fake down on Friday where we had that big 18, that breakdown to 2082, and then it came up through there. And I don't know how many times I tried to buy it going through there, and I was thinking I did the JC trade. I said, that is not resistance anymore. I caught it going through that level, and really, I kind of wish I would have held on to it because it never looked back. So I think it's good. I think you make a point that, yeah, you can rely on these double tops and these triple tops and whatever for your shorter-term trading, but, sometimes the forces to be just take it through these levels. Speaking of that, let's just take a look. I know you look at the spiders as well as the S&Ps here, and I know you like to come up with some targets. Do you have any short-term targets here in the spiders?
Yeah, I have a few. You could take a a 161 Fibonacci extension from the September to October highs. From the September highs to the October lows, right? So essentially that last correction that we saw. And on the SPX, on the S&P 500 cash, that takes us a little bit above 2140. So as of right now, that's definitely the next target for sure on the S&P cash.
So JC,
for me, it's that simple.
Okay, JC, I wanted just to ask you a couple of the other stocks that have had earnings here this morning, and I know you're not a big earnings player, but there is some big movements here. I was just looking here just at 3D Systems here, and I don't know what your thoughts are on the 3D sector, but you had a stock here. It's been weak here, seems like forever. Took out the $30 support there a little bit yesterday, closed right around 30. Is taking out here in the pre-market. It was a very weak report. They missed on both the top and the bottom lines, but stock's not down that much. It's only trading down 75 cents here in the pre-market. Do you have any thoughts on the 3D sector and the 3D stocks?
I really try not to think about it much.
You're so technical. You let the charts tell you what to do, right?
Yeah, and the charts tell me to stay the hell away from it. I mean, so what do I think about it? I try not to. I mean, that's really the deal. I mean, what can I tell you? I mean, rewind a year, media love 3D stocks. It's making all-time highs. It's a sexy story. Readers like to read it, so journalists like to write about it. That's not a recipe to make money. That, if you're a market participant, that keeps journalists in business, and, it keeps, old people entertained on a Saturday morning. I mean, but as far as making money, I mean, that's just not anything that you could do if you're actually managing a portfolio professionally. This thing's a mess. I mean, sure, can we get a mean reversion to 40? And that's a 30% move. I mean, depending on your risk tolerance and your time horizons and everything like that, that could be a great trade. There's just easier things. Look at a chart of these things. Look at this thing, and then look at the other disaster. What's the other disaster? SSYS?
Yeah. Yep.
Yeah, I mean, come on. Look at these disasters, and look at the S&P 500, and look at a lot of the major sectors. Is this really what you want to be buying in this market? You want to be buying this garbage?
Yeah, great.
I mean, that to me, again, I'm a keep it simple, stupid kind of guy. We start out talking about the S&P 500. We talk about McDonald's, and then we look at these disasters. I mean, why on earth would you bother with these things? That's to me, it's that simple.
Okay, let's move on to Natty Gas, and I know you've been stalking this UNG for quite a while, and I think that maybe from a technician standpoint here, and Dennis may or may not disagree with me, but man, you got a little head and shoulders bottom going on there, JC?
Ooh, head and shoulders bottom. I don't know about all that. I mean,
keep it simple. You just told to keep it simple, Joel. Now you're bringing Johnson or Procter and Gamble into this. Come on, or is it Johnson?
Yeah, is that who makes Head and Shoulders?
I think it's Procter and Gamble, isn't it? That makes Head and Shoulders.
I have no idea.
Keep it simple.
Wow,
John.
you lost me on that one, Dennis. I got you now, though. Head and Shoulders, Procter Gamble.
Right, reverse Head and Shoulders. He's looking.
All right. Anyways,
you guys are so clever out there in Detroit. No, I don't. I mean, I like it. I'm in it. I mean, I'm long. I mean, it's very simple. Above the January lows, we're in. Below the January lows, we're not. I mean, it's that simple, and we're still above it. Today, can we break? Possibly. We got inventories, which I hate. I hate these events. I hate inventories. I hate earnings. I hate GDP reports. I hate unemployment reports. I hate when the Fed opens their mouth. I hate all these things. I mean, if everybody could just stay quiet and let the markets trade, it would make my life so much easier. But obviously, we don't live in an ideal world, and we do have to deal with these events. So, I mean, can we take out my stop today and we move on? Possibly. It happens all the time. But, yeah, nothing's changed. We're above the January lows. We want to be long above the January lows. I would argue if we start taking out last week's highs, that would be extremely bullish because that's been resistance over the last 6 weeks or so. Maybe you can start adding to positions perhaps on something like that. It's a mean reversion trade. So, I mean, that's really what it is. You have a bullish momentum divergence, looks great. We're above the January lows, looks great. I would argue that if we start taking out the January lows, this could be a complete disaster and really start crashing because in my experience, when these bullish momentum divergences fail and don't work out and turn into these reversals, things could be really bad. So I could totally see a situation where not only do I get stopped out of this trade, but actually start shorting it in a situation like that. We'll obviously cross that bridge when we get to it, but you know me, guys. No egos. I mean, I don't care if I'm right or wrong. It's not about being right. It's about making money. And that's what I think a lot of people fail to realize. There's that loss aversion. They're scared to death to take a loss. Like, who cares?
Yeah.
As long as your losses are small, it ain't no thing. I mean, who cares? Keep your losses small and let your profits run, and always put yourself in a position where the risk versus reward is skewed in your favor. And if you're constantly doing that, there's nothing to be afraid of in terms of taking a loss. Who cares? If it takes out your stop, oh, well, you move on. Look at McDonald's. Don't look at 3D. Things like,
S&Ps are sliding here. We just made a new pre-market low at 09.25 here, losing a little momentum here. Had to slow drift up here, so we'll be keeping an eye, see if we can find some support. We got a question here about the VIX, JC, and boy, I think I know what you're going to say, but what is the chart about the VIX telling you? VIX.
For me, this 12 level in the VIX has been big. Every time we get down to the 12 area, it's been a good buy. It's an area where you probably want to be, either buying protection or, being on the buy side of the options trades. As you guys know, buying premium is a loser's game, right? So. Yep. If you're constantly the one paying for premium, the odds are just against you, right? Most options expire worthless. You have time against you. The premium just deteriorates, right? So if you're a buyer of premium, you're fighting a very powerful trend. So more often than not, you're better off being a seller of premium, right? And I would argue that the VIX, when it gets down to 12, I'd be more inclined to be on the buying side of premium rather than on the selling side. So that would be one of the rare occasions where actually buying options would be a good idea.
What about Facebook?
That's what the VIX tells me.
Let's move back into the equities here, and I know you were talking about Facebook there. I actually just have a small overnight position long for full disclosure on Facebook. Piper Jaffray with some comments there last night looking at Oculus, saying it's a significant long-term opportunity. Technically speaking here, Facebook has got some relative strength here. It's kind of nice to be a nice base for the last few months down there at 74, and now it's getting towards the upper end of the range here again. What's the technicals telling you on Facebook?
I love it. I love the whole space. I really, really do. I think you nailed it. Nice base, real nice base since last summer, right? I think we break out up where prices consolidating above upward sloping 200-day moving averages. In terms of relative strength, bigger picture from the last couple of years, sure. But since it's been basing, it's kind of been flat, which is not necessarily a bad thing. I like it, but I like the whole space. If you look at if you go to the blog, allstarcharts.com, you can see it. I was writing about it yesterday. If you look at the entire social media space, right, I think that, and you guys know I've been pounding the table along the internet sector, the Dow Jones Internet Index for a while now, and we've been just absolutely ripping to all-time highs. I absolutely love that entire space, the Dow Jones Internet Index. But now I think we can turn our attention a little bit more specifically to the actual social media index. So Solactive is a company that creates a social media index that consists of, like you said, Facebook, Tencent Holdings, which is Chinese. They own all the Chinese social media companies, Twitter, LinkedIn. And I think that we're about to explode higher in that. There's an ETF, SOCL, that tracks the Solactive Social Networks Index, which includes all of those companies. And I think that we're off to the races. I'm going to point out one stock in particular. I actually put out a post this morning on it. It's one of my favorite setups, and I think it's something that is worth mentioning, is LinkedIn. I love it for so many reasons, and I see that we're actually going to gap up 4 points. Hey, see, someone's reading what I'm writing.
There you go, JC.
There you go. There you go. You see, moving.
You're a mover and a shaker. That's your blog moving that thing.
How about that? No. So here's what I love, and from an educational standpoint, forget if I'm right or wrong. It's not the point here. From an educational standpoint, everybody go to the blog, go to allstarcharts.com, and check it out this morning, because I'm literally laying out my favorite setup, or one of my favorite setups. I absolutely love it. When you get a gap higher above former resistance, right? So in the case of LinkedIn, you've got that resistance from the end of 2013. Remember that? Right around 250 and change, 255, something like that, right? And then earlier this month, I don't know if it was earnings. I'm not going to pretend to know. I don't have no idea what it was. Gap up higher, 20, 30 points. It was probably earnings, if I had to guess. Love that, right? So you put your stop below that level. And then not only do we have that, but we have a nice little bull flag, right? Since then, over the last couple of weeks, nice little bull flag, tight little range. We want to buy the breakout out of this range. And, I guess, we're having this conversation at a good time because it certainly appears as though this could potentially happen at the open, which is great because I own it already. So this is a stock that we want to be aggressively long above that former resistance from 2013. If you already want to be in it, which I already am, or buy a breakout above this little flag. There's no one way, to make money. There's multiple ways. It's all about risk management as far as I'm concerned. So, we want to be buying this breakout. I absolutely love it. And I think this takes the social media space higher. I think this takes the internet sector higher. And when you have these guys, really being the leaders in the tech space, I mean, come on, tomorrow we're going to close. We're going to have a monthly close, the highest monthly close in the NASDAQ composite in American history. How awesome is that?
Just looking at this LinkedIn too here, I pulled up the daily before I looked at the pre-market chart, and I was like, wow, it had to gap and go, and then it just wouldn't give in. And now Morgan Stanley initiates coverage on LinkedIn, and an overweight announces a 310 price target. So that is the little bump that you're getting in the issue. As
it wasn't my blog post? It wasn't my blog post?
Sorry, JC.
I think it was JC's blog post. JC's got more. He carries a heavier stick there than Morgan Stanley. I think it was JC's.
Oh, my God, Morgan Stanley. If I ever start listening to what the South Side has to say, just put me out of my misery, guys.
Okay, all right. We've been on
JC's blog was the mover.
Yeah, okay. We've been on the line with JC Parets. He's a Marketfy Maven, and he's the founder of Eagle Bay Capital. He joins us every Thursday to give us his colorful and very opinionated, which we like here on the show. Thanks a lot, JC. Have a great trading day. We'll speak to you next Thursday.
Yeah, as always. Thanks a lot for having me, guys. Talk to you next week.
Thanks,
you.
JC. All right, 8:52. I mean, next week, I hope he says what really is on his mind. I really don't like him just color coding.
I want him to hold back.
Yeah, I mean, I just want him to say what he really thinks. But really, a couple good points there, being on with JC. Is that...
You know what? The one point I loved what he said? He says it's not about making, not about being right, it's about making money. And that is just a great call here because so many people, think, it's all about just being, correct here and making the right calls. But if you have good risk management and you cut your losers well, you can be wrong more than you're right and still make money in this market. And that sounds absurd. But if you're always cutting those losers and getting out of them quickly, you don't actually have to be right all the time to make money. You can be wrong more than you're right and still make money. So let those winners run and cut those losers short. And you don't even have to be right all the time or even half the time.
Yeah, I'm just along those lines too. I mean, if it's nice when you put on a trade and it hits your upside target, you execute during the cash register. But also, you have a trade in, you have the stop in. You're not worried about it. You have a stop. You're going to have a limited loss, and then you can just move on to it. So, making important points about taking the emotion and having to be right out of the market. Well, Dennis, we're getting a little weakness here. S&Ps are traded down 75 cents here. Made a new pre-market low at 8.25. That's above Wednesday's low at 07.25. So I'm going to try and stay in the bullish camp until we take out 07.25. A little pop up. I think if we got back up to mid-range, 11.50, 12 even. But boy, tight ranges here. And how are you going to play it?
Well, I am looking at the social media stocks too. I do have Facebook. I had it overnight there. I do like the setups here. I do like the fact that LinkedIn is trading up $4 here, and that could help maybe some of the other social media stocks here this morning. So Facebook's pulling back a little bit here, but still up 30 cents. I like Facebook today. I think it had a nice move up there just trading yesterday there. I think it could have another nice move up here today. So that's one of my long ideas of the day is Facebook. Still, like I said, I still like short-term McDonald's on the short side here. Long-term, I'm not sure where it's going. I'm not a longer-term trader, more of a short-term guy, but McDonald's is pulling back here in the pre-market, and statistically speaking, they're usually a week after the ex-dividend date, which is today.
Well, two ideas here. One in the Mickey D's, or not in the Mickey D's, General Electric trading down here. Let's see what happens at this 26 here again. I mean, I'm not gonna automatically short it the first time, but the longer that it takes to get back over 26, the size accumulates at that area. Potential short there usually makes a couple highs, one or two highs in the same area. This Mickey D's here, I mean, just this kind of run up into dividend, I'll be keeping a very close eye on that price. I mean, I just think this thing is got to give some of that back going ex dividend. So there's a couple trades, potential trades to take a look at. Well, 8:55, Dennis. We will let you to get ready for that 9 o'clock open. I guess I missed a few questions here, so I'll go back and take a look, and we'll have Brianna with the morning headlines.
That's right, guys. If you had any questions for JC, he will be back next Thursday, so just keep him in mind, and we'll make sure to get to them then. But it is Thursday, February 26th, and ISIS has seized even more Assyrian Christian hostages after taking over nearly a dozen Assyrian villages in northeast Syria in the past few days, an activist said this morning. The Sunni extremist group now holds 262 Assyrians captive. The number has climbed steadily from an initial estimate between 70 and 100 people seized on Monday to 150 as of Wednesday, with women, children, and the elderly among them. The London-based Syrian Observatory for Human Rights put the number of Assyrian hostages seized over the 3 days at 220 in a statement released Thursday. Russia could cut off supplies to neighboring Ukraine by the end of the week if it does not get further payments from the country, a spokesman for the gas company Gazprom said Thursday. Sergei Kuprinyov said in a televised remarks that if no new funds are received from Kiev, then naturally we cannot continue delivering gas to Ukraine. He did not specify the sum. Following a bruising dispute over prices and debt that raised fears of supply disruptions in Europe, Russia and Ukraine signed a deal in October requiring Kiev to pay in advance for gas shipments. Kuprinyov said the discussions with Ukraine's gas company Naftogaz were ongoing, but gave no other details about the talks. The Federal Communications Commission is driving toward a landmark vote Thursday on a sweeping plan that critics warn would impose a new era of regulation for how Americans use and do business on the internet, even as 11th hour appeals injected ad drama behind the scenes. The so-called net neutrality proposal has been the subject of fierce debate, in part because the 332-page plan is being kept from public eyes. President Obama's vocal push for aggressive internet rules also has raised questions on Capitol Hill over undue influence by the White House, but House Republicans who had planned a hearing on that very subject Wednesday said they would postpone after Chairman Tom Wheeler allegedly refused to testify. The District of Columbia defied threats from Congress and moved forward Thursday with legalizing possession of marijuana after a voter-approved initiative. Despite last-minute maneuvers by Republican leaders in Congress and threats that city leaders could face prison time, D.C. Mayor Muriel Bowser said the city was implementing marijuana legalization as approved by voters. The new law took effect at 12:01 a.m. Morgan Stanley has agreed to pay $2.6 billion to settle claims linked to the housing bubble that triggered the 2008 financial crisis. The U.S. Department of Justice claimed the investment bank was packaging bad loans into mortgage-backed securities, misrepresenting their quality. In a regulatory filing, Morgan Stanley said the settlement would cut its 2014 profit in half, slashing earnings from continuing operations by $1.35 per share. It had reported EPS of $2.75 in January. The settlement, reportedly the biggest Morgan Stanley has made in connection with the financial crisis, represents an agreement in principle. Final documentation still needs to be agreed. And finally, the owner of one of the country's largest maraschino cherry suppliers fatally shot himself on Tuesday after authorities allegedly discovered his Brooklyn factory was a front for a drug operation. Dell's maraschino cherries owner Arthur Mondella, 57, was initially cooperative when investors showed up at the facility around 8 a.m., but he became nervous when authorities asked about some suspicious-looking shelving and excused himself to go to the bathroom, where he turned a gun on himself. Shortly thereafter, investigators discovered about 80 pounds of marijuana and hundreds of thousands of dollars stashed in a fake wall. Just a quick reminder, our show is brought to you by our friends at Nadex, where you can find protection from market spikes and opportunities in flat markets using binary options. Open an account today with no fees and only $100 as the minimum deposit. Tell them your friends at Benzinga. If you miss any part of today's show, you can listen to the whole thing again on our podcast. Find us on iTunes, SoundCloud, and Stitcher by searching hashtag pre-market. And of course, guys, tomorrow it's our next special segment all about crude oil. Doug Cass, Dennis Gartman, Ron Insana, and other experts answering your questions live on the show. Don't miss it. It's a great opportunity, and we can get a lot of our questions about this volatile crude oil market answered. Joel, it's about 9 o'clock. Shall we take another quick break?
Yeah. We are going to take a quick break, and we're going to bring on our next guest. And our next guest is a chat room participant, and a good one at that. Sheldon McIntyre, founder of 360 Virtual Advisor. We'll be right back with Sheldon.